Hello and welcome to Ask for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that will move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. The S&P 500 is knocking on the door of record highs here. Wall Street continues to enjoy a rally on stocks, although the day did end mixed on Street. And weighing heavy on investors' minds, Middle East tensions. This after President Trump essentially said the recent Iran-Israel conflict is over and the talks between the U.S. and Iran are getting underway soon. That remains to be seen. And we're speaking with a former U.S. intelligence official for a deep dive into what policy may look like going forward. And some negative data driving Tesla down. European sales continue to see a slump. And we're taking a look at why the EV maker sales are going in the wrong direction. Well, today, President Trump signaled that the U.S. and Iran will engage in talks next week around a peaceful outcome surrounding recent attacks from both sides. And from rising tensions in the Middle East to shifting defense strategies, what does the latest from Iran mean for policy and global markets? Norman Rule is Senior Advisor of Warfare, Irregular Threats, and Terrorism at CSIS. He's also a former U.S. intelligence official and joins us now. Norman, it is good to see you. So let's start with President Trump at the NATO summit today. Norman says the Israel-Iran war, it's over, says the administration is going to be speaking with Iran next week. I'm curious, Norman, what you make of those comments. Do you expect, Norman, that ceasefire to hold? What are the variables that would depend on?
Well, good afternoon. No ceasefire is perfect, but for Tehran, the regime desperately needs to stabilize, to prevent domestic unrest from erupting, to reorganize with so much new leadership and so much internal damage. They need to determine how to overcome this extraordinary air defense weakness that has given Israel a capacity to own their skies and own their ground as well, and then find a way to project deterrence. And most importantly, they now have to find a way to determine what's that next stage with the United States to build that way forward. So this is their situation at present. They're going to project a bellicose rhetoric to show defiance, but they're not looking for trouble that might upset the regime.
Norman, Trump also saying their nuclear site had been obliterated. What do you make of that, Norman? Because, I mean, you've seen the reports, the headlines. There's been a lot of back and forth about that. How far back did we set that Iranian nuclear program and their ambitions?
Well, that's the question the answer policymakers never want to hear in response to a question like that is the correct one, which is it depends. Because right now we have inflicted catastrophic damage on Iran's nuclear program and indeed their enrichment program, their conversion program to turn enriched uranium into a metal. It doesn't exist as a program any longer. Now, there are elements of that program which could be reconstituted, but it would take time. They would have to build literally new facilities in a world where U.S. and Israeli intelligence are watching, in a world where U.S. and Israeli militaries are likely to undertake action. So you could have a timeline that says never, because they think we're going to take action and kill them. You could have a timeline that says 20 to 30 years if they think they would mask it as a civilian program, or you could have a program that says a few months if they thought they could get away with it and they had just enough facilities, which is extraordinarily unlikely. So what I would say is many, many, many months, if not years, and there is little doubt in my mind that our weapons achieved a catastrophic impact on Iran's nuclear enterprise.
Norman, what do the people of Iran think about what's going on? Do we have line of sight there?
Well, we do, because much of it's public. This is a very unhappy population. Iran's regime is politically bankrupt. Their turnout in the last election was historically low. They've had less and less turnout in their various elections. They've had 2 vice presidents impeached. They've had, fired. They've had a finance minister impeached. And as he left office, he announced that about 10 million Iranians drifted into poverty in the last 7 years. 30% of the country is in poverty. They're unable to produce more than a third or 40% of their electricity, and they have no policy solutions. This is a government that is unable to satisfy its population. Now, they do have pools of support, and they have a population in the middle that's uncertain where to go. But at any time, serious unrest could erupt and could overthrow the regime. Another reason that if you're Tehran, you don't want to push the envelope.
Is your base case, Norman, that the regime survives, though, or no, they do get overthrown?
Well, this is something that in my old world we wouldn't predict because we would say we can't judge where US elections are going to go. So please don't ask us to talk about those sorts of things. There is no question this regime is going to evolve. It'll end up in the dust heap of history. If it were to fall apart tomorrow, people will say it is inevitable. Right now, it looks like it's evolving towards some sort of post-revolutionary, thuggish bureaucracy run by Revolutionary Guard types. But at any moment, there could be a countrywide eruption of massive unrest. All of the circumstances are in place to bring the regime down. The population just hasn't taken that step to rise up. And they may not, because this is a very brutal regime that has responded harshly to previous unrest.
A key question for investors, Norman, throughout this was the Strait of Hormuz and whether the regime would have taken action to obstruct or disrupt that. How much of a risk is that, Norman?
Well, the Iranians in the final week or weeks of this conflict, they did what they could to push out as much oil as possible to get it closer to China to satisfy the Chinese requirements and perhaps to take advantage of higher oil prices if there was indeed a closure of the Strait of Hormuz. But what you need to keep in mind is Iran gets much of its food, much of its vegetable oil through the Strait of Hormuz. And by closing the Strait of Hormuz, it would turn the Arab Gulf states, with which it has a productive détente, turn those countries into enemies. And it would also turn much of the world into enemies. And last, it risks bringing the United States with its extraordinary military power, where it's just had a taste of that power, against its military. And why would you do that? Because it doesn't really impact Israel. Do you really need that headache? So there wasn't a significant driver to close the Strait of Hormuz for Iran throughout this conflict.
Norman, great to see you as always. Thank you, sir.
My pleasure. Thank you.
AI powerhouse Nvidia surging to an all-time high, pushing that company's market cap to about $3.77 trillion. Now cements the company as one of the most valuable companies in the world. That stock rose about 4% to 154.31. The record is only the latest milestone for the company. It has risen more than 60% off an April low. Recent earnings, strong sales were catalysts for bullish sentiment for the tech darling. With today's gains, Nvidia stands as the world's largest stock. It was interesting, Mark. We were talking earlier, the team at Loop Capital, they put out a note, maintain their buy. They took the target at 250. Per Bloomberg, that's a street high, and they told their clients Nvidia remains essentially a monopoly for critical tech, and it has pricing and margin power. I'm curious, though, when you look at the charts of Nvidia, what do the technicals tell you?
Well, it new all-time highs. It's very difficult to sell a stock like that. I mean, it's up 28% in the last 3 months, and actually that's more than it's been up in the last year. So people recall that the stock peaked out last summer and went sideways for a period of time, and that's what a lot of these Mag 7 FANG stocks do. And then when they start to ascend again and break out to new highs, it generally pays to follow that move. And so, my technical target is right around 165 and then 180. 250 for me would be aggressive, but I do sense that it can continue likely up into the month of August. The fall might be a time when generally market, we see some consolidation, but I don't see it yet. I see that Nvidia is able to power the semiconductor sector. Now we have great results out of Micron, of course, what we discussed earlier, and AMD. They're all, surging in a way that really makes semis quite attractive here, and I still love technology, so it's right to stick with it.
All right, quite attractive. We'll leave it there. Thank you, Mark. Time now for what to watch Thursday, June 26th. We're going to start off on the earnings front. McCormick and Nike, they're both reporting on Thursday. Nike announced results for the fourth quarter after the markets closed. It's been a rough year for Nike, offering big discounts to clear out product that didn't sell, all while tariffs are weighing on the company's bottom line. Analysts expecting sales could drop by about 15% compared to last year. That's in line with what Nike is warning. Taking a look at the Fed, some more Fed commentary that's coming Thursday from Cleveland Fed President Beth Hammack. It's coming after 2 days of testimony from Fed Chair Jerome Powell. Powell reiterating a wait-and-see stance approach when it comes to rate cuts, throwing some cold water on recent commentary from some Fed officials that we could see a rate cut as early as July. Moving to housing, we're going to be getting pending home sales data for May. Economists forecasting no change in sales compared to April, suggesting housing market may be finding a floor amid elevated mortgage rates and affordability issues. Stick around, much more asking for a trend. That's still to come. U.S. stocks closing mixed as the Nasdaq gets a lift amid the tech rally. Yahoo Finance's Allie Canal joins us now with the trading day takeaways. Allie.
Yes, so we saw this rally stall a bit with S&P 500 not able to nab that record, but all in all, not a terrible day in the market here. We saw the Dow close down about 100 basis points. Nasdaq Composite, the only index to close in the green, up about 0.3%, led by Nvidia. We saw a 4% rise there, a new record close. Then the S&P 500 essentially flat, again, just shy of that record. And you could see, this is a year-to-date chart, the declines that we saw in April on the heels of Trump's Liberation Day tariff announcements. But the fact that we've just seen such a V-shaped recovery here, that's been really impressive to strategists. And a big reason why is that we've seemed to have reached peak uncertainty when it comes to tariffs. Middle East tensions, they seem to be de-escalating a bit. And to that point, we are seeing more risk on trading in this market. I want to take a look at Bitcoin, and let's look at a 5-day here, because we are now trading just around 108,000 bucks a coin. We saw some choppiness earlier in the week. Over the past 5 days, we are up 4%. Crude oil, this was the big TBD factor out of this escalation in the Middle East, but we are below 70 bucks a barrel, edging just a bit higher today. But over the past 5 days, we are down 13% here. And then finally, quick check on the NASDAQ 100. We saw that record close yesterday. We're continuing those gains today. And obviously, Nvidia, those mega cap tech stocks, it's all about that today.
Yeah, it seems like investors broadly decided some of the worst case scenarios are taken off the table. Geopolitical risk, you heard President Trump today saying the Israel-Iran war is over. You know, they think investors decided he's kind of backed off the maximalist position on tariffs. Although a deadline's coming up, so we'll see. And
right,
earnings on deck.
There are still risks in this market here, but for now, we are seeing that tech outperformance back. And I want to take a look at some of the sector action, because even today, that was just so evident in this market, just clearly leading the way higher there. This is an intraday trading. And then if we take a look month to date, again, you'll just see those trends deepen, along with oil and energy due to some of those risks that we saw in the Middle East here. But if we take a look under the hood at the NASDAQ 100, you see that once again, it's those big names, your Nvidias, Microsoft, Amazon, Google, Meta. If we equal weight it out, it is interesting to see some other big players. I mean, we just had that big earnings report from Micron, AMD as well, Palantir. A lot of AI adjacent companies are doing very well. However, we still have the Mag 7 doing a lot of the heavy lifting here. And I thought this chart was interesting. It paints a picture that the Mag 7 is just continuing to outperform some of those broader market indexes, some of its peers. It's ahead of communication services, ahead of information technology. And despite some of the lows that we've seen throughout the past few years, it just continues to trend higher there. So that has stuck out to me when we continue into the summer. And I've been speaking to a few strategists, and they actually say that tech has a lot more room to run, that perhaps there was some positioning earlier in the year. People thought they were overweight tech. And now it seems like at this point, maybe you don't want to be underweight. You want to continue to pour money into this sector.
You know, you were talking to strategists. We had the great Mark Newton on the show today, the well-respected technician. Tech is dominating.
Tech is dominating, actual quote. We asked him in the break. So that's great to see. And then finally, all eyes are on the Fed, right? We had Jerome Powell's 2-day testimony wrapping up today. He did talk about potential rate cuts, and we have seen the odds of a rate cut shift slightly. So odds of a September rate cut that's still being priced in by markets, 70%. 1 month ago was about 50%, so more conviction there. But then when we look at a July rate cut, 1 week ago we were at 13%. Now we're at 23%. And it got me thinking about, if we do get a cut in July, obviously I think the initial reaction for markets is to go higher, but I wonder if it sends the wrong message. Because would we be cutting for good reasons, or would we be cutting for bad reasons? That seems to be the big debate even within the Fed right now. We got those summary of economic projections. A crop of folks think that we're going to be on hold through the end of the year, and then we have 8 officials thinking that we're going to have 2 cuts. So that, I think, is the big question mark that markets are going to have to wrestle with.
President Trump today, by the way, talking about the Fed and about Powell, not
3 or 4 choices.
not saying nice things. But you know what? Powell's asked about that. It's like water off a rock.
Oh yeah, at this point he has his answers. He's not worried about it.
No, it doesn't fret it. Thank you, Allie. Stick around. Much more Ask for a Trend still to come. Tesla shares went downhill today as more negative data emerges in its core auto business. Yahoo Finance's Praz Subramanian joins us now with more. Praz.
Tesla European sales down per the ACA trade group in May to about 13,800 units. That's down 27.9% compared to a year ago. Meanwhile, overall sales in the region were up 25% in Europe, and this despite the new Model Y being available. So what's going on here, Josh? It's kind of more of the same that we've been talking about. There's the Musk factor alienating buyers with this supportive far right-wing figures. And of course, there's better competition from Chinese makes like BYD, SAIC, as well as Volkswagen, right? The legacy automaker. So same story in Europe, demand evaporating. The big question is, will it ever recover?
Praz there with the headlines. Let's bring back in our expert contributor now, Fundstrat Global Advisors, Mark Newton, to discuss some recent moves with Tesla. You look at the technicals on this one, Mark. What do you see?
It's encouraging. The stock's been up 15% over the last 3 months. I mean, obviously, it's had a tough first half of the year. Always discouraging when a stock becomes more political. But honestly, you know, Tesla's back half of the year is shaping up to be very, very good. I mean, they had a great first weekend with this robo-taxi rollout. We know that the combination of both FSD and self-autonomous both could account for potentially $1 trillion in the next 5 years. And a lot of that is not being shown right now in the current data. So it is sort of a show-me stock. Elon always overpromises and to some extent has underdelivered, but yet the stock is something that is very promising for me. I like the stock a lot. I think getting back above 349 would put it back towards new all-time highs. And so I'm bullish. My cycle projections show the stock continuing to rise in the back half of the year, much different than the first part of the year. So I like it.
Praz, let me ask you just back to fundamentals there. When you think about competition for Tesla in Europe, where is that primarily coming from, Praz? I mean, is it China, domestic, European players, both?
Yeah, you see some upside sales here for BMW, right? And also Volkswagen. I mentioned a lot of new smaller models coming out that are playing in spaces that Tesla isn't operating. Same with the Chinese automakers. They're not operating that sort of cheaper market, the sub 25,000, 30,000 euro market where those other players are operating. Now, Tesla's long been saying that they are going to come out with this cheaper EV. They've been saying that now for the past year. We haven't seen it yet. We're all kind of anxiously waiting to see what it is. What is it going to be? A smaller car? Is it going to be like a decontented Model Y? We'll see. But what Mark was saying is absolutely right, because talking about technicals too, this stock is totally divorced from fundamentals, right? We talk about poor European sales, stock down a bit, but it's been up a lot recently. The stock is a momentum stock, right, Mark? And I think that as you see in second half of the year, seasonality-wise, that stock tends to do better.
Yeah, absolutely right. Look, you look at the first part of the year, a lot of these sales are from a time when Elon was still affiliated with the administration, and so it might not account for the current day. It's more of what happened in recent history. And I think that sentiment should start to change, in my view, going forward.
All right, thank you, Praz. And a big thank you, of course, to Mark Newton for hanging us with this afternoon. Some final thoughts, Mark.
NASDAQ 100 at new all-time highs. I think Nvidia at new all-time highs. S&P will get there sooner than later. At a time when breadth is slowly but surely starting to expand, that's a good sign. At a time when the economy seems to be working, earnings are good, and geopolitical risks are easing. So investors don't seem to be all in on stocks by a long shot. People are still concerned for the right reasons. That's generally a time you will still want to stick with the trend with markets at new highs.
Not so much a technical question for you, but a question for a guy who's watched the markets for a long time. You go back to early April to Liberation Day, right? Sky is falling, run for the hills. What do you just make of the move here? Are you surprised by how fast and hard we've come back?
I look at sentiment, I look at cycles. I think they're more important for me in determining where prices can go rather than Fed speak or earnings or any of those. So, there were classic signs of capitulation that happened at the April lows. And I put out a report actually in April that said stocks are close to bottoming. I am surprised, of course, that we're back at new all-time highs. You can see a bounce, but the fact that tech carried through as quickly as it did, very, very encouraging. For my great-great-grandfather, Isaac Newton, you don't ever want to fight trends. Things that are accelerating cannot be moved without sufficient force. So, look, technically things are in great shape, and sentiment has been a key reason why investors want to stick on board and try to divorce themselves from what's happening in the world and just concentrate on their portfolios.
When you call that, Bob, did you get any pushback from clients on that?
I get a lot of pushback,
Yeah.
of course. I mean, I think that people think you're crazy when we see markets selling off to the extent they did,
Yeah.
specifically in late March. I happen to be in Latin America, and so trying to write reports while being in Medellin and Lima, it's not fun to have to go back and address the volatility, and people look at you a little funny. So happy that things worked out, and you know, it's encouraging to see both Tom Lee and myself have been, you know, optimistic and saw reasons as to why stocks should have bottomed and pushed higher. And still reasons for optimism, you know, I think in the back half of this year, even if we get a bumpy fall. So happy for the recovery.
Mark, great to have you on set today.
Likewise,
Thank you, sir.
great to be here.
Great
Thanks.
to have you. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.